Hi, welcome to the Market Alert for Monday, the 4th of March 2024. So weekend news, everything rallies on first day of March after Fed hints at next QE. Blimey, we're looking at more QE then. Let's move the markets on Friday, sending the German Dax and the S&P 500 higher. Talking of prices moving higher, gold and bonds soar as Fed Waller hints at QE reversal twist. I would like to see the Fed's agency MBS holding go to zero and a shift in the mortgage-backed securities is the MBS in Treasury holdings toward a larger share of shorter-dated Treasury securities. Obviously, the gold market doesn't believe this could be possible. Dell induced AI stock surge while soft ISM ramps Fed rate cut pricing, so we've gone back to that again. It just seems to oscillate or from one week to the other, doesn't it, about hawkish and dovishness. And this was an interesting one that was sent to me. The US national debt is rising by $1 trillion every 100 days. Just let that sink in. When this ends, it's going to end badly. As simple as that. It's a data-heavy week this week. Let's have a look, see where we are overnight. We've got nothing for today. But as we head into the week, we've got Powell speaking on Wednesday. We've also got the ADP on Wednesday as well. And the JOLTS. And then from there, we've got Powell out again on Thursday. We've got an ECB conference as well. And we've also got the main financing rate from Europe as well. I missed that one. Policy statement as well. That's a monetary one. And then, of course, the big one of the week. If you've got ADP, you've got non-farm payroll on Friday. That's going to be an interesting one. Right, let's have a look at the markets, see what they did during Friday, and kick off with the Dow. So in the Dow on Friday, the market moving up there, managing just to get above 62% retracement, but struggling with this overnight. Maybe there's going to be a bit of a pullback during the week up to those non-farm payrolls, given how much the market's put on of late. Again, it's just be worth having a quick look at the monthly chart just to see how much the markets have put on since the last correction. And the last major correction happened here. So let's just have a look through here. So what have we got from there up to there? Wow. That's 10,000 points. Oh, that's, I'm thinking it's a daily chart. Hang on a second. The last correction is from here, isn't it? Through October, through to where we're currently at. 6,961 points. Wow. That's a big move to the upside. There's still been no correction. This started in October. Santa rally has never ended. Santa hasn't gone home and continues to move the markets higher. Of course, they want the market up at 40,000. And we're still in that 39,285 area. So again, we're only about 700 points off this, 715. And that can be easily achieved over the period of 1 week, but 40,000 is the goal of this market. Sideways at the moment in the daily, and on Friday saw the market down in the electronic session, then moved up a bit. Then we had some news, and then the market spiked up after the Fed member spoke during Friday about QE, and the Dell induced AI reports and more talk of QE again. I mean, it's just insane. This is, and then 100 days. 1 trillion is added to the balance sheet with debt. German DAX, new all-time high, 17,818. We're going to put on 1,000 points in a matter of weeks for the German DAX as well. If we have a look at the monthly of this market too, as it's a Monday and a new month, let's just have a look, see where we are. Again, you can see how prices have just continued to move to the upside there. And where are we points wise for the German DAX? Let's just go back to October. This is October, so October through to where we're currently, the DAX has put on 3,229 points. Again, massive move for this market over such a short period of time. It just goes to show you that the elites are never going to crash the markets. I was in that camp that they would drop the markets and create a catastrophic fall. They've never done it. They're never going to, because they're all long in those markets. They know it's easy money, and they've got the Fed on their side to print money to keep the market moving. It's that's the reality. The trouble is, when you've traded for 30 odd years, and in the days when the markets were allowed to go down up to 2008, that's how it worked, and it's very difficult to change your mindset, but you've got to be flexible as a trader, and I just don't see this coming down. I see corrections, but I don't see anything where the market is going to crash 40% that a lot of the so-called experts spoke about. I just don't see that being allowed to happen, because the elite and BlackRock and Vanguard have got full control of the markets, and obviously allowed by the Fed as well, who have probably heavily invested, as we saw last year in the alert where Powell had made millions out of the stock market. Well, it's very easy to do when you're the Fed chair. In the in the 30-minute DAX, there you can see we had a bit of a pullback, but we're moving back up overnight. Just going to go back to the daily, because we've got to have a bit of a correction in this, even if it's short term, during the last move to the upside there, something like that. It's got to be a bit of a breather. Can't just continue vertically as it's done for the last few weeks. S&P 500 also making a new all-time high during Friday's session, which you can see there, way above that 5,000 target that we saw a few weeks ago. And again, in the monthly chart, you can see the vertical nature. Just says that war is good for the markets. That's all it's saying here, as it can be seen there, as it continues to move to the upside. New month, March 24, and continuing to make new all-time highs. The UK 100, not the case. Market sideways, got the budget this month as well, so there's going to be a lot about that helping the FT. Very choppy on Friday, market down, then up, back down, consolidated, went back down, and then came up with the US markets there, but a bit of weakness overnight, nowhere near the high of Friday either. US dollar sideways, waiting for the NFP numbers, and you can see down on Friday as well, which allowed the metals to move higher, which we'll look at now. Silver allowed to move up during Friday's session. Nice move there to the 200 MA, to the 78.89. That's where it ends for this market for the time being, and no doubt make its way back down. You can see the 30-minute chart there, allowing it again to talk of QE that's done this. They'll discount that very quickly, and the market will soon return back down towards the low of Friday. Meanwhile, gold, different situation. Daily chart, you can see that moving higher. A lot of interest in gold at the moment as it starts to break out and move to the upside. 30-minute chart, vertical move there, again on the prospect of QE. Be careful what you ask for. Market moving higher. The news behind gold, let me just show you it. So here you can see gold forecast holds below the 2,100 mark. Gold price forecast, it all seems to be the Fed is going to carry the weight of gold. Gold steady at 2-month highs, but you'll see they're all waiting for the news on Friday. It's all sort of dependent on what's coming on the or within the NFP numbers during Friday. So we'll just have to see what happens. There's the main headline there. Gold steady near 2-month highs before Fed data heavy week. So that's why we're seeing the market move up at the moment. That could be very quickly reversed during this week. You've got Powell's testimony, non-farm payrolls are waiting to be released this week. And in the gold-silver ratio, starting to move back up already. As you can see there, still heading back to that 92, towards 92 level there for this market. Right, let's have a quick look at the trades during Friday as the market continued to move higher and what is happening overnight. So Friday, again, we saw the markets moving higher from the off. You can see there that was at 7 a.m. when the futures kicked in, and then moving higher, then sideways to higher. Very choppy during Friday. Again, an indication that we may have reached those end of a bit of an exhaustion period at the moment. Market down to the high, back through the high, and then just trying to hold at this level, which it did successfully through the mid-morning. No trades in the morning, and then back down to the close mid-morning, and then up through the high once more. Again in the Dow pre-market session, price is back finding support at the high, then breaking the high, bringing it back to the high. You can see how these lines work so well, previous days high and low, and then through the high in the afternoon as the Dow opened, waiting for the news, and you can see prices moving down there just when we got down just into the news, taking the profits off the trade there, and then the market moving back to the upside, back to the high. So you can see that there, and then obviously following the Dow and moving to the upside. A quick look at the overnights, and there you can see at the moment a bit of weakness around the market. It's got a bit of a downtrend going on there at the moment in this market. Okay, that's it for this one. Today there's no news. Market make its own mind. It's looking pretty tired on this up move. It's got to have a bit of a down day at some point, and some profit taking has got to be seen in this market. But you never know. The madness that we live in at the moment and live with, nothing would surprise me. Okay, that's it for this one. As ever, thanks for watching. See you in the next.